Welcome to another episode of Market on Cues. How are you doing, ma'am?
Thank you, Vinayak. It's been a great summer.
Despite the quiet summer, the most captivating event of the year that happens in August is the Jackson Hole Symposium. What did you think about this year's event?
This is the 48th year of this symposium happening in Jackson Hole, Vinayak. And it's a great platform where all the senior bankers and the central bankers from around the world, academicians, policymakers, they all gather to share, exchange ideas, and share some policy reviews, and not just to address the day to day problems, but also the direction of the global economy, the cooperation between different countries, the structural shifts in the global economy. Right? So, this year's symposium, the theme was basically addressing the structural changes to the labor market. So, mind you, it's not talking about the monetary policy alone, where the rate should go up or down, or fiscal policy or whatever. It is more about the structural shifts around in the global economy, particularly relating to the labor force. Now, so the ideas that were being addressed, the questions that were being addressed and the ideas shared were how the new artificial intelligence will affect the labor force, how the disruptive migration, immigration policies like what President Trump is announcing and some other countries also, if that disrupts the mobility of labor force, how it will affect the inflation, how will it affect the productivity of the labor market. So quite a few very, very important issues that the world is facing right now were addressed at this symposium, including the impact of the aging population on the global economy and the workforce, how it affects the workforce. So quite a few of those things were addressed. Most central banks from the G3, the Bank of Japan governor, the Bank of England governor, the ECB president, as well as, of course, the Fed chair, all were there. Most stayed away from talking about the exact monetary policy. It was all about the future direction of the global economy and the key issues facing the global economy. So I obviously followed through the entire symposium in great detail. Not much new came out of it, but still it was interesting to hear all their comments and views.
So that brings me to my question. What did you think of the Fed chair, Mr. Powell's address over the weekend? What about that was interesting for you?
So, Fed chair's speech generally is the most anticipated, most awaited, most scrutinized of the speeches at Jackson Hole, always. Because US is the biggest economy. US's Fed chair's speech, which is this is the platform where the Fed chair is supposed to articulate the long-term strategy or the medium-term framework of the US monetary policy. Yeah. So there was heightened scrutiny of Mr. Powell's speech. Also, from all the pressure that you are hearing on Mr. Powell, the chance of him getting his term getting renewed after May 2026 is pretty limited, which means this was last of his speeches at such a platform. Yeah. And also, I think the market was scrutinizing his speech to get signs of if he was feeling the pressure from President Trump. Because in a way, it's not just pressure on him, it's also political pressure on Fed officials and how the Fed chair would react to that and how the Fed chair will protect the independence of the Fed Reserve. I think the market was also wanting to get some signs on those fronts. Yeah. So Mr. Powell's speech in this regard kind of left me feeling a little bit disappointed because he talked a lot about the economic data and the US economy and the things that we normally talk about every Fed meeting every 2 months. Right? In terms of the long term or the medium term framework, there was very little discussed. Yeah? He talked about how the tariffs would put pressure on inflation. So inflation risk is definitely there. But he said it could be temporary. So, okay. On the other hand, he highlighted the weakness in the US labor market. So these are two very conflicting forces, right? You want higher labor participation and low employment rate, which is the weakening data being reflected in the American economy right now. And the inflation, which the Fed wants to keep at 2%, but the tariffs will probably take it higher. So how will the Fed balance the two forces? Mr. Powell said that he thinks that the monetary policy stance need to be adjusted. Effectively, he's saying that there is probably going to be a rate cut in September. Right? So he's shown a very dovish stand on that front. Didn't give me much to show about any great changes to the Fed long-term goal or long-term policies or medium-term framework. So there were a few questions left unanswered for me from Fed Powell's speech.
How do you think the markets will react?
So markets would react. Obviously, a dovish Fed chair effectively means the chances for a rate cut in September has been almost cemented now. Right? Market was expecting a rate cut in September, but now it's a 95% chance there'll be not just a 25 basis point rate cut, but market is pricing a 50 basis point rate cut also in September. Yeah? So definite rate cut before December, and then market is pricing more rate cuts in 2026 also at 100 basis points or so. So overall, there has been a downward shift in the yield curve. So the fixed income market, obviously, when the yield curve goes down, the prices go up. So the bonds are doing okay. Equity market is also happy with the fact that if there are more rate cuts coming in, there'll be more boost to the labor market and the underlying spending power of people. Equity market also seems to have taken it very positively. So if you look at every number in the market right now is looking green this morning trading. Yeah.
So speaking about Mr. Powell once again, what do you think of President Trump's pressure of removal of the Fed chair? Do you think it is appropriate?
Not at all, Anjali. I think regardless of whether Mr. Powell is doing a great job or a bad job or a good job, any pressure from the president on Fed chair is inappropriate.
Following up on that very quickly, what is your personal opinion on the Fed chair's performance though?
It's a very tricky question, right? It's so if I look at the performance of the American economy, yeah, which is what basically the Fed Reserve is supposed to manage, balance the economic growth with unemployment and inflation data, and it's done a good job. Right? The American economy is on solid footing. It's a kind of a Goldilocks scenario where inflation has been tamed down to in the 2 and 3 range. Unemployment is very, very low at the moment. Yes, GDP growth has fallen below 2%. I think the last was 1.5. But still, it's the economy is on very stable footing. So if I look at just that, then Chair Powell has done a good job. But then for the Fed Reserve, it's not just the current performance of the economy. It's also managing the future economy, the direction of the future economy. And for that, you also need to win the confidence of the market. I think Mr. Powell has failed to earn the market confidence to some level. It's partly because, he was not an economist to start with. So market was questioning anyways. Plus, in recent times when President Trump has been very vocal about his displeasure and putting pressure on Mr. Powell, he probably didn't show very, very strong resistance to maintain his independence, and that may have disappointed few people. Overall, I'm of the opinion that Mr. Powell should definitely continue till end of his term in May 2026. To me, there is no case for his earlier removal. There is, regardless of what President Trump says, the Supreme Court has confirmed that as per the constitutional right, there is protection provided to Fed officials against presidential firing. So he cannot be fired just like that. There may be some other ways of putting pressure, but otherwise, literally speaking, logically speaking, technically, there is no way he can be fired, and he should not be fired.
Well, thank you so much for your time, ma'am.
It's been a pleasure. Thank you, Vinayak. Thank you, Anjali.
Thank you, ma'am.